Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial mystery behind every company. And boy, do we have a treat for you today. Get ready for some stock market magic and a bit of accounting acrobatics. Before we dive in, if you love seeing these corporate filings get broken down into plain English, make sure you hit that subscribe button also. Join our Discord linked in the description below for even more insights. Today we are dissecting an 8K filing from Investar Holding Corporation, ticker symbol ISTRA now. This report is about updating information regarding a private placement offering and incorporating details about a previous merger. Think of it as a company making sure all its paperwork is squeaky clean after a big deal, especially when it comes to telling investors about the newly acquired pieces. So what happened here in June of 2025? Investor decided to sell some preferred stock to a select group of investors. This is called a private placement, meaning it wasn't open to everyone. This preferred stock, specifically the 6.5% series, a non-cumulative perpetual convertible preferred stock, is pretty interesting. It pays a set dividend, and crucially, it can be converted into common stock. So those investors could potentially become regular shareholders down the line, adding more shares to the market. Then the filing tells us about a company called Wichita Falls Bankshares Inc. or WFB. Investor merged with WFB. This means Investor essentially bought WFB and now WFB is part of Investor. This 8K is being filed to update some financial pictures to include WFB properly following specific accounting rules. It is all about making sure the company's financial statements accurately reflect the combined business, following rules like 3-01 and 3-05 of Regulation SX. The most interesting part for us today is the financial data about this acquired company. WFB, the filing includes its financial statements. We are looking at the balance sheets as of the 30th of September 2025 and the 31st of December 2024, and also the income statements for the first 9 months of 2025 and 2024. These are crucial for understanding how WFB was performing right before and during the merger. Let's look at WFB's balance sheets. On the 30th of September 2025, its unaudited balance sheet shows us its assets, liabilities, and equity. While the report doesn't give us the specific numbers here to dissect in detail for this script, these statements would reveal WFB's financial health at that point. They'd show what WFB owned, what it owed, and the net worth belonging to its shareholders. Comparing the September 2025 numbers to those at the end of 2024 helps us see any significant changes that happened in its financial position over that period. Beyond the raw numbers, there is the Management Discussion and Analysis, or MD3VI. This is where the management of WFB explains what those financial numbers mean. They talk about the company's financial condition and what drove its results, looking at the 9 months ending the 30th of September 2025. And comparing it to the same period in 2024 gives us a clear view of WFB's operational performance. Did it grow? Did profits increase or decrease? The MD3VI answers these questions and provides valuable context. Now this is where it all comes together. The filing also presents pro forma financial information. This means it shows us what Investor would have looked like financially if the WFB merger had happened before the reporting periods. So we get an unaudited pro forma combined condensed consolidated balance sheet as of the 30th of September 2025. And an income statement for the 9 months ending the 30th of September 2025. This gives us a hypothetical but very useful snapshot of the combined company's financial standing. It helps investors understand the potential scale and performance of the new, larger Investor. The actual financial statements of WFB are included as Exhibit 99.1. These are the detailed balance sheets and income statements we just discussed. These are the bedrock for understanding the acquired business. Exhibit 99.2 contains the management's discussion and analysis for WFB. This is the narrative that explains the numbers in Exhibit 99.1. It's where management provides its perspective on the company's performance and outlook. And Exhibit 99.3 houses the unaudited pro forma combined condensed consolidated financial statements as of and for the 9 months ended the 30th of September 2025. These are the hypothetical financials for the merged entity. Finally, for those who love the technical side of things, the cover page of this filing is formatted in something called inline XBRL. This is a newer way of presenting financial data that makes it easier for computers to read and analyze, making information more accessible for investors and regulators alike. Now, let's shift gears and talk about what this all means from a big picture perspective. Investor is growing through acquisition, which is a common strategy in the banking sector, especially for smaller banks looking to gain scale and efficiency. The merger with WFB is a clear step in that direction. By acquiring WFB, Investor is likely aiming to expand its market reach, diversify its revenue streams, and potentially achieve cost savings through combined operations. However, mergers also come with risks. Integrating two companies can be challenging, and there is always a risk that the projected synergies might not materialize. We saw Investar also had a private placement for series of preferred stock. This means they raised capital, likely to fund operations or perhaps even the acquisition itself. Issuing preferred stock can be a way to raise funds without diluting existing common shareholders, as much as a common stock offering might, but it does come with a fixed dividend cost. Looking at the financial information provided, especially the pro forma statements, will be key for investors. They need to see if the combined entity is on solid footing. Are revenues growing? Are expenses being managed effectively? The real test will be in how well Investar integrates WFB and how the combined entity performs in the coming quarters. We need to watch for trends in net interest income, non-interest income, and any changes in loan loss provisions. A strong MD/CFDA will shed light on the management's confidence in the combined business's future. In my opinion, Investar is making bold moves to position itself for growth. The acquisition of WFB is a significant step, and the capital raise via preferred stock shows a strategic effort to strengthen its financial position. The main risk here is execution. Can they truly integrate WFB smoothly and realize the expected benefits? If they can, this could be a very positive development for the company and its shareholders. If not, the integration challenges could weigh on performance. There are no glaring red flags jumped out in this particular 8K itself, as it is more of a procedural update and financial supplement, but the underlying strategy of growth through acquisition is one that always warrants close observation. Alright, that is our breakdown of Investar Holding Corporation's latest filing. What is your take on these merger and capital raising strategies? Do you think Investar is heading in the right direction? Drop your thoughts in the comments below. If this analysis was valuable and helped you understand this corporate move, please hit that like button. It really helps out the channel. And make sure you subscribe for more clear and concise breakdowns of financial documents. Don't forget to check out our Discord community through the link in the description. Thanks for watching, and we will see you in the next episode of Corporate Decoder.